All right, come on in, come on in. We're just sharing the invite right now, and we're gonna get the live studio audience in here. For you newbies, you are in for a treat. I am not one of those 10,000 clowns out there giving you stock picks every day. I am a multi-decade, multi-millionaire analyst from Wall Street, retired since 2008. Why? Because I was paid for my picks by guys like Jim Cramer, yes, that Jim Cramer, George Soros, and if you saw the movie Dumb Money, Stevie Cohen, right? We are going to have a big show today regarding AI, other technologies, just a massive data dump because last week was Thanksgiving. So we have 2 weeks of all the accumulated knowledge that I've gathered from all of my contacts, all of my peers, my inner circle of also multi-decade, multi-millionaire, Wall Street professionals, veterans, retired. All that information coming to you on Stock Talk Live in just a couple of minutes while we wait. We're just waiting for the live audience. So while you're waiting for you veterans, make sure you share the invite on Twitter. In fact, here it is right here, right? You just find me here, Money Mark Stocks. There is the invite right there. Okay, get us going. Stock Talk Live is live, and we are going to start right in. We got a lot to talk about, so I'm not going to be wasting any time today. Just got to validate the video and audio real quick. There we go. We got video, we got audio. We got, oh yeah, we got people. We got an audience. We got the hellos. By the way, your comments. Definitely put comments in there. I read every single one of them. All the hellos, all the thanks. I appreciate those. So put those in there. They help the algorithm. By the way, right, we're going to get started in a second because we do have the numbers we need. The reason I do this, the reason that me, a multimillionaire making 7 figures a year who used to sell my picks to Jim Cramer, give this to you for free is because I was a loser at one point. I was near homeless at one point. I came from nothing, living in a basement, not a basement apartment, a basement, $143 a month, to a penthouse. Okay, that wall that you see behind me, that wall right outside there belongs to a billionaire. You guys all know that's my neighbor here in this penthouse in Miami Beach. So to go from nothing to this and not give back to y'all would be crazy. A very big lapse of karma. So that's what I'm here for. And all I ask in return, no subscriptions, no advertisements, no sponsorships, no nothing, no tricks. All I ask is that you spread the word, okay? Because I'm here 2 hours every week for you, me giving back to you because my mentor gave to me for free. And that's all there is to it. And with that being said, y'all know what it is. It's Friday. It's Money Mark. It's Stock Talk Live. We got another big show as usual. For you newbies out there, look at the description of this video. It has lots of resources, lots of links to a lot of free stuff that I provide you with. Not the least of which, this is my Twitter page. Just crossed over 8,000 followers there. We have over 10,000 worldwide on various channels. This is my background. There's 3 things that you should look for in somebody that you listen to on the internet, because there are 10,000 throwing you stock picks. Which people should you listen to? It's not which picks you should listen to. It's which people you should listen to. And there's 3 things to look for. 1, do they give you the real name? I give you mine. It's right here, right? Their real credentials for why they should be able to pick, for example, AI stocks, technology stocks. This is me with proof, links to my credentials. And number 3, a real-time performance tracker of my picks going back to 2014 and before that, from 2009 to 2014. I do have proof right here when it loads up from Seeking Alpha, 24 triples I provided to Seeking Alpha in just a 5-year period, and proof is all here. That's what 99% of those 10,000 clowns don't give you that I do. And as you see here, we haven't had a losing pick since my daughter was born over a year and a half ago. And there you go, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 straight winning picks in my official portfolio, and you see the multi-baggers there. That's just what it is, okay? So, with that being said, let's get into the show. We'll start with the macro, and we got the fear greed index. This is pretty much all, I don't get too much into the macro because it's all about risk reward. For you newbies out there, being successful and making millions on stocks really comes down to two things. Finding the people that can give you the picks, because you should not be, look, you got things to do in your life. You got your own career, you've got your own strengths, and trust me, when I was taught in college about P ratios and all that, that did not help me one bit. It hurt me. I came out of college with my chest out thinking I was going to be a millionaire. I lost money for 3 years in a row. You know why? Because colleges are a ripoff. I was staring at the screen on CNBC hoping they would give me the good picks. They didn't. You know why? Because CNBC is a ripoff. Both of those entities are here to make money off of you, with nothing to do with how successful you end up being in that endeavor. Think about it. Think about it. And that was the difference between being successful and where I am today. All right. And really what it comes down to is finding the good picks and executing them with good risk reward principles. And we are going to talk about those principles today, as we do every week, with my risk reward charts, the red lines, the green lines, and all that. And to understand that, I have a free this right here, Spaces. Again, no tricks. This is for you. I don't care if you watch it or not, but I put it out there for my friends and family. And if you want to be part of my friends and family, check it out. It's out there for you. I also put this article, Get Rich on Stocks, also for free. This will take you 10 minutes to read at most. And then where's the video? Oh, yeah. This one right here on my YouTube channel, Make Millions with Mark. Everything you're going to hear on this show, if it doesn't make sense, it's because you haven't checked out those three things. That's your entire education on what I do. All right, enough of that. Let's get back to it. The fear greed index is getting stronger now. We are now at 41, pretty close to neutral. Remember a couple weeks ago when I came on here and showed you that we had dropped down to 6? Only goes to 7 here, but trust me, it got down to 6 on an intraday basis, okay? During the tariff tantrum, it got down to 3. And you guys know what happened to the stock market after that. It tore up, right? You see right there, boom, the market tore up since then. And then we had this pullback to 7, and you saw what's happened since then, tearing up again. Fear greed is a great indicator to help us understand where the market is and where you should be buying in. And if you couple that with our risk reward charts, you see the red and green lines, then you can understand where we are. And of course, right now we are still in a yellow alert. I told you that IWM, the Russell 2000, was the most undervalued or the least overvalued of the three. Why? Very simply, between the red and the green line. And by the way, those just tuning in right now, we got all these stocks to talk about. Nvidia, Dell, Netflix, all that stuff, including my official picks and the updates on those. So stay tuned. This is just the macro part. We're going to drill down next. You got to understand the market first. Takes 2 minutes. So we pulled back to here. That is a really healthy pullback towards the yellow line. And the yellow line historically is a very good place, as you can see, to buy stocks. Because even if we go below the yellow line, it's not for long. It could be half a year at worst. And then you get huge gains after that, right? The yellow line, look, the green line you will almost never get. 3 green line hits in the last 25 years. Don't wait for that. You want the yellow line. And from that perspective, we got halfway down to the yellow line. You have to start buying when we get that far down. And you see the big reward that we've had since then. The IWM up 10% in just over 2 weeks since that time. So there's your little macro overview. And lastly, the 2-year yield, yawn. Where is it? Here we go. Sitting at nice low levels. So we have plenty of things that are healthy for the market. Yes, there are aspects of the economy that are deteriorating, but not at a fast pace. In fact, a perfect pace to embolden the Fed to lower rates. And of course, come May of next year, we are going to have a whole new look Fed that is going to be made in Donald Trump's image, whether you like him or not. I'm not here to be political, but let's face it, we all know The one thing we can all agree, he wants lower rates, and all else being equal, lower rates are good for stocks in the absence of a recession, and we do not see an imminent recession. Okay, we see weaknesses in the economy. There is always weaknesses in the economy. Don't focus on that. CNBC's there to confuse you. Let's just focus on the fact that the overall picture remains solid and conducive to lower rates. All right, enough of that. Let's get to stocks. And I've got these tabs plus my notes. So in no particular order, it's just going to go in the order of how I set up these tabs. Netflix. We were going to talk, by the way, we're also going to talk about, if you looked at the invite, Google versus Nvidia, what to look for there, what's happening in the transition from Hopper to Blackwell and then to Rubin, and who the big winners are going to be as those transitions take place, right? This is a fast evolving marketplace, and it's going to leave some companies behind as you go from one iteration to the other. There are companies that benefited from Hopper that no longer benefit from the current iteration, and there are those who are benefiting now that will no longer benefit from the next iteration. So as we go from Hopper to Blackwell to Rubin, you want to stay on top of who benefits from each of those. That's my job as a technology analyst with technology resources and experts on my side to gather that information and feed it to you. So anyways, starting off with, and by the way, this does have to do with AI. Let's make no mistake. Netflix is looking to acquire Warner Brothers in a deal valued at $83 billion. Okay? For me, most notably, personally, I think this is great news because now Netflix is going to own DC, Batman, Superman, etc. And I don't know if you agree with me, but frankly, aside from the Batman franchise, I have not been impressed with what DC dishes out in terms of movies. They can do better. The Superman movies can be better. The Justice League movies can be better. They pale in comparison. If you just look at the numbers, they pale in comparison to what Marvel has done. Not recently, but we'll get going again, right? Like Endgame's hard to beat. They're going to try to get us ramped up there again, but let's face it, DC has done nothing like Endgame to this point. But now there's a chance because Netflix has taken them over. And here's what you need to know about this. Okay, we'll put up the Netflix chart, by the way. And by the way, white lines, you know what those mean. If you haven't read the stuff, and I'm not going to explain it to you. But there's where Netflix stands right now in my risk-reward lines for them. Okay, and this reminds me of a lot of what happened when Disney acquired Marvel. And just so you know, at the time, they paid $4 billion for Marvel, and analysts thought it was too much, thought they were paying too much. And I'm hearing that today about this deal. Did Netflix pay too much for Warner Brothers? Well, chill out, because there's a couple things that we know. One, Warner Brothers is not the best at creating content. So if Netflix can do a better job with, for example, I'm going to keep using DC as an example. There are other things involved in this, but just as an example, if they can produce better DC movies, expand the DC universe, make DC more competitive with Marvel, all of a sudden that small piece of the equation will balloon in value. All right? Because Disney back in the day paying $4 billion for Marvel was not expensive. It was a bargain. Do you know what Marvel's worth today? An estimated, not $4 billion, $54 billion. And what makes that happen? What unlocked all that value? CGI was one thing. Disney's ability to make great movies was another thing. And the fact that Disney was a much bigger, more powerful distribution channel of content than Marvel was by itself. Those are three major things that made the deal, that magic word that you may have heard before, accretive. If you don't know what that means, look it up, ask AI. All right? What we have now is similar, except replace the word CGI with AI. AI, you already see the videos that are being made out there. They're incredible. And I've told you for, a year and a half, 2 years now, that we are going to see full feature-length movies made entirely with AI in the future. And what movies benefit more from AI than these big blockbuster DC, Marvel, Transformers, all those types of movies in the future are going to cost a lot less to make. And you know, with my pick, IZEA, IZEA, we'll talk about that later if you want, right? These guys help gather the social media influencers out there who are using now AI to produce amazing AI content themselves that makes it a lot cheaper for these movie houses to advertise their movies. Time Warner, in fact, using IZEA on all their movies. Barbie, Superman, F1, all used IZEA advertising through their social media marketing abilities. Okay? So, if you can cut the cost of production, you can cut the cost of what you pay actors, because let's face it, you can have AI actors, you can have AI voiceovers, right? You cut the cost of advertising, but you maintain, if not increase, the revenue that you produce from each movie because you have such a much larger channel. Netflix, only YouTube is bigger. Then you have more revenue and less expenses, and that means that profits go through the roof. So there are folks out there looking at this and saying, man, they're paying 30 times earnings or something like that for Warner Brothers. Don't look at it that way. Look at it as, what can they do with those earnings? Because if they can double or quadruple those earnings, then the P they're paying is only 15 or maybe 7 on something that is going to have future recurring value. Okay, so this is what I've said for a while. I don't know what I just did. We'll get rid of it. And so this is the way you got to think about things. So what's your action item? Buy Netflix? Not necessarily. I don't like buying the biggest of the big, right? And you see it down a little bit today. That's partly because there are people out there that think they're overpaying, right? Because the Qs are up. The Russell is down slightly, right? 0.3%, but Netflix is down 3%. That's a sign that there are people out there that don't like this deal. I think the deal's fine, but I'm not playing for 3%. I'm playing for big percent moves, okay? And so what we're looking at right now, my team, are who are the next content providers that are going to benefit most from AI and what it brings to the table. And there's a lot of them out there, so stay tuned. We are going to talk about that. I may talk about it in the Q&A section. In fact, I'll put it here. If time permits, we'll start talking about some of the names that I've been looking at. One of them, by the way, is not an American company. You can look it up, though. It is the licensee of Dragon Ball Z. And if you don't know what Dragon Ball is, Dragon Ball Z, it is like a major part of the millennials' life, okay? This is a major piece of millennial nostalgia, right? It's huge. It's absolutely huge. And when you look at Dragon Ball, it is the exact type of content that AI is going to enable crazy things. Real life humans in movies, better animation, all these things that are going to enable these millennials to continue to live out their childhood memories of Dragon Ball into the future and introduce that to their children and their children's children. And Dragon Ball can become like what DC or Marvel or Star Wars or the Transformers, etc. have become. Okay, so we're going to talk about that, and I'm going to be looking for those other content pieces. And by the way, Time Warner Discovery, just so you know, it's Warner Brothers, WBD. There's what the stock has done over the last few months. And I had actually said here, you see that? This was months and months and months ago. I put on this chart right here that WBD owns the DC universe, a $10 billion estimated value at that time, right? And WBD had a $32 billion market cap, $32 billion. They just got bought for 80. Okay? And I said that Disney should buy them. I still believe that Disney would have been the best. But Disney came out and said, we're not going to bid for it. Part of the reason, I believe, is antitrust, right? And they got their hands full with other stuff. But God, how great would it have been to see Marvel and DC characters introduced against each other or with each other in the same movie sometime in the future. We're not going to see that happen, although Netflix and Disney could form a partnership for movies like that. But that was the idea, that Disney should buy them out. Netflix ended up being the ones that bought them out. And it was December of 2022, right here, that I thought that that puts should be sold on weakness. Maybe the stock should be bought, and the stock, here we go, up 155% from those levels and up 289% from the tariff tantrum lows. If you have any questions or comments on this, put it in the queue. I am here to answer Q&A starting around 3 o'clock until 3:55. I will answer every and all questions until that time. So go ahead and put that in there. And by the way, if you like what I'm doing for you here, a multimillionaire, 7-figure a year, retired veteran who used to get paid by Jim Cramer for his picks, giving it all to you for free with no catches, no strings attached. All I ask is that thumbs up and to spread the word. All right, so give me that thumbs up right now. Let's keep going. We got a lot more to talk about. And we can talk more about that later if you would like. By the way, this you can look at this later. I'm not going to go through it, but this was just an AI search that said, was the Disney price for Marvel considered expensive at the time? And unequivocally, yes. It gave all the reasons. And what's really funny, if you replace the words Disney and Marvel with Netflix and Warner, this looks like a similar critique to a T of what you see today going on with Netflix. Do not miss seeing the forest for the trees when it comes to this. All right, next up, China's Nvidia. More threads, surges 400% on their trading debut. You may have never heard of more threads, but we are seeing this bifurcation, this separation between the East and the West. China versus the US. Nvidia versus more threads. Sure, why not, right? This is China's attempt to make sure that they are not dependent on us for technology, just like we're not dependent. We're trying to not be dependent on them for things like rare earths. So expect things like this to continue. However, make no mistake, Nvidia is still the unquestioned, never mind Google, they are unquestioned by anybody, leader in terms of providing infrastructure for training these LLMs. That's very different than inference. What's the difference? Very quickly and easily, training is how you create the AI. Okay, so if you use Perplexity or ChatGPT or any of that stuff, you are accessing the AI. The AI had to be created in the first place. Nvidia is the absolute undisputed king on that. Although Google is starting to make some moves, okay? So stay tuned for that. When it comes to inference, us tapping into that AI and asking it questions like I just showed you about, was Disney, did Disney overpay for Marvel at the time? That taps into the AI. That's an inference, right? I am making a query into AI, and there's a different set of infrastructure that is optimal for that. And in fact, it can be different for different use cases. So we are going to see a lot of this going on. So if you're asking yourself, well, Mark has said that nobody can beat Nvidia, so I shouldn't pay attention to Google. No. There's the distinction between training and inference, and I've said all along that inference will be a whole new ball game. Okay? And Nvidia is not going to be so dominant. They will not be, they are already proving to not be so dominant on inference as they are in training. Training will continue though. Okay? Don't think the training is done. We're not even close to done. Training is going to continue deep into the foreseeable future. We're not even making future length movies out of AI yet. Why? Because the AI is not trained well enough to do that. So just use that as one example. Right? We don't have self-driving cars all over the world now. The AI is still being developed. The AI is still being developed for so many things, and that training is going to remain important, which is why I actually have a contact in the industry. Salute to you. You know who you are, who I spoke to this week among the many, right? Who said that his contacts inside of Nvidia tell him that they are sold out for the next 3 years. Okay? So Nvidia, right? AI is not a bubble. There is tremendous demand for this. The winners are going to be the monsters of global economy in the future, right? You see Meta, Google, they want to continue their dominance. And to do that, they have to be the winners of the AI race. So they are investing in the AI race, as are OpenAI, Anthropic, all that. There are newcomers coming in here spending billions of dollars to try to take over what Meta and Google and Microsoft have built. So you've got a bunch of companies trying to be the winners of the future. They're all spending money on Nvidia, and at some point, we're going to see the winners emerge, the losers start to fall off, and that's where a correction will come. All right? Because as the losers fall off, you're going to have companies that are going to no longer be investing in Nvidia equipment and infrastructure. And a lot of that infrastructure, then let's say that there's a bankruptcy amongst them. That bankruptcy is going to leave all that infrastructure with no home. Somebody's going to buy that stuff out of infrastructure and therefore out of bankruptcy and therefore not need to buy it from Nvidia. So there are some rough times, some rocky roads coming ahead for Nvidia. And by the way, let's pull up the risk reward chart. And so it should be no surprise to you that even though I've been bullish on Nvidia and still bullish on it as a company, I've been bullish on the stock since way back here when the stock was 42, okay? We saw the stock go all the way up to where did we get to? 208, but the risk reward charts have told us repeatedly, sell here, boom, down 27%. Sell here, down 37%. Sell here, stock has gone nowhere for months. How long has it been? It's been 4.5, 5 months that Nvidia stock has gone nowhere. Why? A combination of the fundamentals meeting the price. Okay? There is a specific value for everything. Everything has a value and everything has a price. And when the price exceeds the value, it becomes tougher for that price to go continually higher at the same pace as what we've seen. And Nvidia has gone up at an 85% annualized clip for the last 2.5 years. But its long-term risk-reward chart says it should only grow at 20% on average. So if you buy now, you can expect a 20% annualized return into the future. That's cool. As long as you buy at the red line and sell at the red line sometime in the future. Yeah, you could buy now at 189 and it could drop to 89 before going to 289. And you'll be up 20% annualized. But wouldn't you rather buy it down here at the midpoint line? Maybe if it gets down to 100 and then you ride that to 300 and triple your money instead of only making 20% annualized? That's what risk reward is all about. Okay? Not buying what's hot, what everybody wants to buy, and this is going to be the best name forever. It's going to make my kids rich. Not if you don't buy it at the right time, Jack, because Wall Street has already determined that this is what it's worth, and who are you or me to say that 200 analysts on Wall Street with MBA from Harvard, 3-piece suits on the 30th floor of a New York City building, working 70 hours a week to determine what this is worth? Do you really think that we should compete against that? No. Unless we have some special information and at this point, back here I did. Back here I told you. All those things that the haters were saying about Nvidia, wrong. I had experts in the industry telling me that it was wrong, and so we had an advantage over everybody else. Just like when Facebook became my first official pick, it's still here in the official portfolio, right? Facebook was my first pick at 57, okay? And it may have split since then because I don't know if it's, we'll pull up the meta chart so you can see where we are in the risk reward of there. Boom, also. And if you bought it close to the midpoint line, or especially here in 2023, 2022, you had a chance to buy it at the green line. All right? I picked the stock in 2014, yeah, at 54, so that was not split adjusted, right? Somewhere around 54. Now it's 654. Bought it near the green line, rode it to higher heights. I got rid of it at that point. I probably haven't looked back since then because the company became too big and I had no advantage. You have to have an advantage. The reason I had the advantage back here is that Wall Street was saying, oh my God, everybody's buying an iPhone. Nobody cares about laptops anymore. And everybody accesses Facebook from the laptop. So Facebook is dead. Do you see how stupid people are? And there are people coming on CNBC telling you to stay away from Facebook because they were dead because of the mobile movement. Are you stupid? Like, these people didn't understand because they probably aren't Facebook users. They're in a three-piece suit on the 30th story of a New York City building calculating numbers all day, not playing with Facebook. To know that if you have Facebook on your iPhone, you can use Facebook all day, every day, instead of your laptop, which you're only on maybe an hour a day. So the opportunity for Facebook went through the roof. They didn't understand. That was our advantage. And once they realized that, our advantage was gone. So boom. All right. That's how you make money. All right. Let's keep going. So as far as the Chinese go, okay, cool. But guess what? The United States has, the West in general, has control over the best technology in terms of making these chips. The Taiwanese favor us. TSMC favors us. The semiconductor capital equipment, the equipment that makes semiconductors, they favor us. ASML favors us. So the Chinese are going to have a really hard time replicating what we can do on our side. So that's still a benefit for all the US-based AI companies, including Nvidia, as long as you pay attention to risk reward. All right, let me see if we can run this.
9 of these
Let's
go
see.
into that
If
rack.
you can't hear this, let me know.
Those 9 switches are connected by this miracle. This is the NVLink spine. 2 miles of cables, 5,000 cables structured, all coaxed, impedance matched, and it connects all 72 GPUs to all of the other 72 GPUs across
this is important, y'all.
Called NVLink switch.
Thanks, Daddy.
130 terabytes per second of bandwidth across the NVLink spine. So just put in perspective, the peak traffic of the entire internet, is 900 terabits per second.
Divide that by 8.
Divide that by 8. This moves more traffic than the entire internet. Every single GPU can talk to every other GPU at exactly the same time. This
is crazy, okay? This is how powerful Nvidia is. This is how powerful their infrastructure is. Look at this. Do you see how intricate that is? Okay? And it's all interconnected. There is Mellanox technology in there that they acquired. Nobody else can get access to that. Okay, so these are the things that go on, and their technology, what he just showed you, can process as much as the entire internet during its peak traffic. That is how powerful AI is. AI is more powerful than the entire internet. And we are just getting started on this. All right. One thing you got to know. This goes back to what I said. The infrastructure is changing. That spine that you saw, we're going to increasingly see light, not electricity, going through those wires, right? The way that data gets transferred is going to be more photonic in the future. You can look that up. And so photonics companies, light-based companies, all these companies, it's going to be the next generation. And by the way, this is going to produce less heat, require less electricity. So there's a lot of companies that, right, are going to have they're not going to benefit as much as you might think, because the infrastructure players on the back end are saying we need to solve the problem of how much electricity and how much heat gets exhausted by our infrastructure. Because if we don't, we have a bottleneck. Electricity is a bottleneck. Heat is a bottleneck. It is slowing down the proliferation of our products. So if we want to sell more product, we have to make our product more energy efficient and produce less heat. These are things that a lot of people don't think about. These are what and I don't think about it either because I don't know enough. I'm not an expert. I don't create AI data centers. I don't design these chips. I don't design these systems, but I know experts who have been in the industry for decades, and they're the ones that I pay for their research to inform me of what's going on so I can tell you and not be one of the 10,000 clowns out there that are just talking out there, you know what. All right. So that's that. So let's get to more stocks. What does this mean? Well, first of all, you see what Dell came out with in the quarter. Let's pull up their chart. Still some room in terms of risk reward there. All right. You see those are light white lines, not white lines, and not red green lines. And if you don't know what that all means, then you haven't gone back and you haven't listened to this, you haven't read this, and you haven't watched this. Okay, that's your homework, right? I'm here to lead the horses to water. It's up to you whether you drink or drown. Here's the water. Here's the water. Here's the water. I'm going to keep going for the veterans out here who have drank the water and understand what I'm talking about. So there's some room on the risk reward there. Just popping off the 200-day moving average. And that's been a good one for them, right? Bounced off it here, bounced off it here. They got a little resistance with the 50-day moving average here. We'll see if it gets through it. But there's at least fundamentally, right, some nice room in between the low and the high line for Dell. Something to keep in mind for those of you who want to decide if you want to buy or sell Dell. And more importantly, the quarter they just announced. Okay, they put up like $5 billion or so of AI server sales. More importantly, their guidance was for $9 billion in Q4, which will end in January. All right, that has significant implications because I know a lot of y'all, you hated me when I told you to sell TSSI. You loved me when I told you to buy it at 2. When I was the first person to show proof that XAI, Elon Musk's XAI, was using TSSI, okay? When I showed you that proof, I told you this was a buy. I put these lines together and said there was tremendous upside in this stock. The stock went from 2 to 20, all right? I told you to sell. The risk reward rules told us to sell. The stock dropped all the way to 6, right? Which gave us the opportunity to buy again because it was the low end of the risk reward range. And then it went back to 20 and I got out. And some of you laughed when it went to 30, but who's laughing now? Because yeah, man, you can try to call quarters and you can try to call the chart, but the big money makers, the Warren Buffetts, the George Soroses of the world, they work. Stan Druckenmiller, my personal favorite. Stan Druckenmiller says, look 18 months into the future and value the company based on 18 months into the future. Not what the chart looks like, not what the quarter was, but 18 months into the future. All right? And I look 18 months in the future and I draw these lines. And when we go above those lines, all bets are off. I wish you luck. I'm selling at 20. I hope it goes to 30 for you. I'm cool with that. I've had plenty of stocks go above my risk reward lines. But guess what? When risk reward is not in my favor, I don't play. Because in order to win, when you play that way, you need LUCK. And I don't want to play with LUCK. I want to play with FUCK. F money. That's what I have because I don't rely on LUCK. And the way you do that is to have the odds in your favor. You don't want to go to the casino. You want to be the casino. That's what this system does. It makes you the casino. It makes you the one that's willing to buy when everybody's scared because, hey, it's cheap. Okay? This is where it says it's cheap. This is where it says it's cheap. This is where it says it's cheap. This is expensive. And look at what happened. If you bought here, if you bought here, if you bought here versus here, here, and here. Big difference. Okay? Now, let's get back to the subject at hand though. What does Dell's guidance mean for TSSI? Well, okay. I'm not moving the lines, first of all. They have an opportunity. They have a great management team. I'm really, first of all, like, listen, I feel really bad because I can't talk to the company, right? And all rights, I can't even talk to the investor relations person, who I have a great relationship with otherwise. But out of all due respect, because I have been speaking negatively about the stock, out of respect for all of them that I have, I don't interact with them person to person. I don't want to waste their time. I don't want to use their time to give me information to tell you they're overvalued. That's not fair. Right? I'm really about karma and fairness. But I do understand about the company. I've learned enough about them to tell you that from a risk reward standpoint, okay, we're, on the lower end, higher end of the low side, just midpoint there. You can see, right? You got eyes. And, but that guidance from Dell, that guidance from Dell makes this very interesting and juicy because Dell is going to nearly double how much they produce in Q4 versus Q3. All right. And it's very clear from this chart, right? Look at Dell. Dell's done fine. TSSI, what happened? Oh, there we go. Collapsed, right? And they might look similar, but they're not because Dell has pretty much been the same price for the last few months and TSSI's price has collapsed the same last few months. Why? Because TSSI had a horrible quarter in the midst of a Dell quarter that was considered quite good. How? Why? Because TSSI wasn't producing as much work for Dell as a lot of people hoped. And in fact, I thought, and again, I'm not here to call technical charts. I'm not here to call quarters, but I will talk about them for your benefit. I thought the quarter would be good because it was a fiscal year end for the government and TSSI processes a lot for the government. Guess what? Some things happened. The government shut down. TSSI didn't have fully integrated systems back to its customer. And because of that, they didn't get a lot of work pushed their way. Didn't see most of that coming. And as a result, you could get the quarter wrong. And that's why I didn't place a big bet on the quarter. Because that's looking for LUCK instead of FUCK money. All right? The stock was up high. The risk reward was the king there. What I thought about the quarter, what you thought about the chart, didn't matter. People were like, it's bouncing off the 50-day moving average. Well, it was. So what? It's bouncing off the 200-day moving average. Well, so what? It was bouncing off of the top of the risk reward range. So the 200-day moving average was wrong. The 50-day moving average was wrong. The impression that Q3 would be good was wrong. The risk reward chart was right. And it was the most simple thing. You didn't have to do any thinking. You look at the chart and say, that's high. I'm not playing it. Done. Winning in stocks is really easy once you have the risk reward lines. If you are dealing with the right analyst, it's really easy. You buy low, sell high. You've heard that your whole life. Buy low, sell high. You just need to know what low and what high is. So, bottom line, I do expect a better Q4 out of TSSI for a couple of reasons. One, their systems are surely more integrated now than they were in Q3. Two, the government shutdown is over and there should be some give back, right? Some of that business that didn't come in Q3 should come in Q4. And last but not least, Dell is going to have like 80% more output in Q4. They're not going to process all of that themselves. I almost guarantee that. They have overflow, okay? And when they have overflow, boom, that's where TSSI comes in for sure. And I know and I'm really sorry. Like, this is a show. I'm being entertaining. So when I say that TSSI is Dell's biatch, all right, I mean, that's a little disrespectful, but it's a show. I'm trying to be entertaining. But the fact of the matter is, it's really kind of true if you think about it, because Dell is going to feed Dell first. TSSI is going to get the scraps. Dell is going to make sure that its facilities are doing as much work as humanly possible. Why? Because there's 45% gross margins in integrating these AI servers. 45%. Do you know what Dell's gross margins are as a company? 17, 18, not 45. So if they have the opportunity to keep something that makes 45 for themselves, that helps the 17 go to 18, helps the 18 to go to 19, and it makes Wall Street happy. And Dell wants to make Wall Street happy. So they're going to keep that for themselves. And if there's some leftovers, here, TSSI, you can eat too. And in Q4, it looks like they will be able to eat too. But here's the thing you got to pay attention to. Don't be buying the stock right now. Right? I own a little, full disclosure, I own a little bit of the stock. Let me see. I'll even tell you. I don't know if I own the stock or if I've shorted some puts. If you don't know what it means to short puts or write puts, you got to look that up yourself. I'm not here to teach you these things. We got limited time. It's already 2:45, and I got a lot of other things to talk to you about, right? Let me see what I got here. TSSI, very small position of shares, and I've also shorted some puts. Also very small position. Very small. Why very small, Mark? You think Q4 is going to be good? Yeah, because Q4 is not going to be announced until March. Okay? And yet Dell, so let's see. Dell will announce Q4 on March 27th. And I fully expect that when they do, that this number will probably be closer to 10 billion or 11 billion. And that will be, all else being equal, bullish for TSSI. It won't mean for sure that TSSI had a great quarter because Dell had a great Q3. TSSI didn't, but it will be a good sign, right? And Dell will announce that right around February 27th. TSSI won't announce theirs until March 27th. For those who are keeping track at home, we just passed November 27th. December, January, February, that's almost 3 months before Dell reports and almost 4 months before TSSI reports. There's a lot of things that can happen between now and then. And so I'm not going to play with it very much. I got a little bookmark position. If you want to do that, I'm not going to be mad at it. But there's the update. There's the information. There's the chart. You do with it what you want. I'm here to help you with the information you need to know. And now you have it. Let's go on to the next thing. We got Gatekeeper. Let me see. We're going to talk about your Q&A too. We got some great questions in the queue. Some AI stuff. Boom. Gatekeeper, one of my official picks. That has done pretty damn well, if you ask me, because remember when I told y'all back here, I gave y'all the cheat code on how to play Gatekeeper. As a company that has volatile quarters, they had more volatile quarters in the past. The future is going to be less volatile because of all the orders that have come in, multitude of orders that came in. I told you, when they inevitably have a tough quarter, you want to buy the stock because better quarters will be coming. They have, boom, good quarters, bad quarters, good quarters, bad quarters. And if they have a bad quarter and the stock reacts negatively, that's your chance to buy because a good quarter is coming next in all likelihood. And so the stock gave us an opportunity to buy here in, let's call it 30 cents. It was as low as 20 cents basically, right? And the stock went as high as 220. It's a near 10 bagger. I'll give you the exact number. It was almost 10 bagger, 942% in less than 1 year. This is what we're talking about, folks, right? It's in the official portfolio, so you can look it up yourself, right? And little rough patch here in the stock because they've raised some money. I told you in past episodes, go check it out. We're not going to go through it for the sake of time here of why they raised money. It was a bullish raise, not a bearish raise. If you don't know the difference, then you haven't checked out my informational materials. So do that. Okay, but the news on Gatekeeper, the newest news, is they got a POC contract. That's a proof of concept contract with L&T Technologies for a Middle East project. What the F does all that mean? Quite simply, proof of concept is basically L&T, who is a major consultant in the Middle East. Okay, so when trains have technology placed on them, which is a major global trend right now, which is fueling Gatekeeper stock, right? We already saw it in the US. I reported it to you. I told you that Canada was doing it. You see it already. Toronto doing business with Gatekeeper. New York, Philadelphia, probably LA. all these cities, all these states doing business with Gatekeeper in the US, Toronto in Canada, of course, them having a strong foothold in Canada, going to get a lot more Canadian business. We've seen mandates in Europe. I wrote about it on my website, so if you go to this website, you'll find articles about Gatekeeper on the website. I'm not advertising, I'm just giving you information, right? And now we're seeing that spread out to the Middle East, US, Canada, Europe, Middle East, added in there. Okay? And the Middle East is like, damn, look at what they're doing in the US and Canada and Europe. They're taking old trains with old technology and they're replacing them with new trains. And if you want to invest in train companies, you can go do that. But those are giant companies. Alstom. All right? I don't even know if Alstom's a public company because I don't care. Yeah, there you go. Giant company, right? We look up their market cap and tens of billions for sure. Stock. 10 billion euros, okay? So in the tens of billions, like I said. These are giant companies that you're not going to make tons of money investing in Alstom, right? You're going to invest in smaller companies and make your money off of that. Look at these. Look at that. You're not, it's nothing. It's not good, right? This, beautiful. This proof of concept, what they're doing is saying, Gatekeeper, we heard about you. And I've heard from back channels already. Part of it was from New York. The New York win was instrumental. I told you, what did I tell you? 30 years of experience, okay? When Philadelphia called up New York and said, guys, we know that you're looking for technology for your trains. We're going to tell you right now, you want to use Gatekeeper. We've been using it for years. They are the best, hands down, bar none, end of story. Thank you, goodbye. And New York said, thank you, Philadelphia, for that information. We'll give you information sometime in the future, right? We'll all benefit. And New York said, Gatekeeper, we're choosing you. Philadelphia said so. Well, now, guess what? By winning Philadelphia, they won New York. By winning New York, they got global notoriety because New York is one of the most important cities on earth. And when New York speaks, everybody listens. And now the rest of the world, they didn't even go looking for this, Gatekeeper. These companies are coming to them and saying, yo, what are you doing for New York? It's simple. The old trains are being replaced with new trains, and I'm going to speed this up, right, because we want to keep this exciting. The new trains around the world are being replaced by new trains, and the new trains are being outfitted with technology, cameras, AI, to monitor the trains, all kinds of things about how the train operates, what's going on inside the train, make sure people aren't getting beat up or robbed inside the train. This is a global trend. Partly mandated and partly voluntary out there. And so we're seeing these things happen. And so the Middle East wants this technology. And this consultant who does most of the installation of these technologies said, Gatekeeper, come here, show off for us, give us that proof of concept. It's a formality. They're going to do business with these guys. I can almost guarantee it because they're doing business with just about everybody else. They're winning just about every deal I can find. I don't find many deals where they lose, which is crazy because they used to have, back here when I thought it was a good stock to buy, 20% market share, and now it's closer to 40% from what I'm finding out there. So their market share is increasing in a market that's growing. What else do you need to know? All right? You can ask questions if you have any. AEHR. This is what I'm talking about with regard to, we'll bring up the chart, the proliferation of AI and the advancement of AI. As we go from Hopper to Blackwell to Rubin, air is going to be increasingly important and needed along the way. And I told you that, look at that. You see, this is why I put markings here, so people will remember what Mark said at given points in time. It was right here. I called air an AI gold mine. They had won enough deals. They had proven enough to me. I had enough experts. We paid money. In fact, you guys, thank you to all of you who contributed. Right? I wanted to do a research project that was so big that I really didn't want to come out of my pocket for this research. And I said, guys, do you guys want to kick in a little something for this research? A lot of you in my community hit me up. through a GoFundMe. I don't even know what I did. And that money got spent on experts who did an evaluation of the entire industry to find out, is Air the one and only company, or the best company, more importantly, that can handle what is coming in AI? And the answer was yes. And we have made money on that research. Okay? Third party, expert, independent, industry experts. I'm not an industry expert on AI. I'm an expert on valuing stocks. Okay, some guy at Goldman Sachs is not an expert on semiconductors. He's an expert on valuing stocks. If he's not using a semiconductor expert to figure out his calculation inputs, he's effing up. If I don't, I'm effing up. If you don't, you're effing up. If those 10,000 clowns and 99% of them, I guarantee you, are not using industry experts for their research, they don't know what they're talking about. You can't validate whether something is real or not unless an expert tells you. You all do something better than me. There is something in your life. Think about it right now. This is an exercise. Think about it right now. Something that you do in your life that you could guarantee you do better than me. Whether it's an oil change or making French fries or heart surgery or rocket science, there is something that you do better than me. How do you know? Because you've been doing it for a long time. You have become an expert at that. How am I going to compete against you? The mere utterance of me saying that I can compete against your knowledge in that sector exposes me as a dummy, a moron, an idiot. And yet you've got 10,000 of them out there trying to give you stock picks without that expertise. Stupid. And you're stupid if you follow them. You need them to tell you who is your independent third-party expert that has validated what you're saying. Okay? We've done that with this one. These guys are going to benefit. We're going to see as all that stuff continues. You see that photonics that I talked about, those lasers that are going to help with AI moving forward, the more advanced chips, these AI accelerators coming out of Google. We haven't talked about Google versus Nvidia. That's still on the sheet. We're running out of time here. That is going to increasingly be done by Air, all right? And but we've had a big run up. We had a huge run up. I got out of the stock, okay? I mean, bro, when you make 360% in 6 months, you move that money to something else. Move that money to something else and that goes up. Move that money to something else and that goes up. If you keep buying great stocks at risk-reward lows and selling them as they move higher and move that money into other stocks at risk-reward lows, you just keep printing that FUCK money. Okay? We got up high. We had a pullback. And look at that. That nice 200-day moving average is a great place when you are bullish on a stock, when you are bullish on their prospects. It's like here, I was bearish on their prospects, and they were near the top of the risk-reward line. I didn't see that 200-day moving average as being something to look at in a positive light. But look at the difference between the placement of this 200-day moving average and the concerns I was telling you about TSSI because of the expert analysis that I get and the result that you got, right? And then you look at an Air, this 200-day moving average much further down in the channel. The story is much better. This is a 200-day moving average that you could say, yeah, I wanted to pick up some Air at these levels, and you've been rewarded for that. Now, that doesn't mean that it won't reject the 50 and come back down. It doesn't mean that the stock market won't come down and drag Air with it. So I'm not backing up the truck on Air at this time. The future is a long time, all right? So we are still in the process of seeing Air become increasingly important. That's going to be a multi-year process. So there's plenty of time to get into this name little by little. I own some Air now. I own more Air this week than I did the last time I spoke to you. Okay, so boom, there you go, AEHR. Let's see. Nvidia versus Google. We already talked about inference, okay? Google seems to be doing a great job. Their TCUs. I told you we're going from CPUs to GPUs, and then these TCUs are going to come into the mix. You can look up what all that means later. We're running out of time, right? But Google seems to be the TCU monster right now. Their stock, great recovery. When everybody was saying this company is dead, AI is going to kill them, what you were dealing with was a risk-reward opportunity. In fact, this line should be more white, a secondary white line, because it is proven for 15 plus years to hold that line, okay? With mega cap stocks that are established winners, with winning management teams who know how to ride out ups and downs, you want to buy them at key risk reward levels. Because these are long-term winners. They're not going to triple overnight like a lot of the picks that I gave you, right? But they're going to make you nice, good, steady money if you buy them at the right times. And this was clearly, right, an opportunity to buy Google because of a very simple principle. When a company is great, they will figure it out. Salesforce.com. Figured it out, 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 figured it out. How many times do I have to say it? They never didn't figure it out. I think that will continue. Okay, I'm predisposed, by the way, to be a buyer, an owner of CRM stock. I don't own it right now. It's a big cap stock. I'm still doing my assessment, my analysis. They just gave you a great quarter, though. Stock's up 5% today. Look at what the stock has done, right? Because everybody thinks AI is going to kill Salesforce.com. And Salesforce.com came up and said, F y'all, in your face, here's a great quarter, 17%. In a couple of weeks on the stock for those who jumped in. By the way, I have bought a little bit of Workday for similar reasons, right? Favoring Workday because they haven't announced a great quarter yet. They aren't up 17% in the last couple of weeks, and they are closer to this bottom line level where I think they will figure it out, figure it out, figure it out. Simple. Okay, because this is another great company. In my estimation, I've been covering enterprise software companies since 1994. I'm ashamed. It's getting so old. 55 years old. I just turned 55 last week, y'all, by the way. Happy birthday to me. Anyways, so that's Air. They are going to be participating at an investor summit on the 16th. That is coming up the week after next, so stay tuned for that. We'll leave this tab up here so we can remind you next week. We don't need this. That was just some extra work I was doing. So boom, that takes care of our tabs. Let's take care of my notes, and then we're going to take care of your Q&A until 3:55. All right, so Nvidia versus Google. If you have any questions about that, let me know. But Google is absolutely going to be, they're now, but now you see the risk rewards up there, right? They're taking over. They figured it out. They got the TCUs, they got the infrastructure, and now they have the best. Gemini 3. Gemini is at this moment the leader. Not ChatGPT, not Perplexity, not Grok. It's now moved to Google's Gemini, which was trained on Google's TCUs. Woo! Cracks in Nvidia's armor. This is the first time I'm saying it. If it wasn't the last show, right? This is definitely the first block of weeks that I'm saying we're starting to see a little bit of that movement where Nvidia's dominance provided an incentive for these customers of Nvidia to say, you know what? Why should we be giving them these massive margins? Nvidia makes a chip for $1 and sells it for $5. Maybe we could figure out how to make those chips for $4 and save ourselves some money. And that's kind of what's going on here, folks. So the cracks in the Nvidia armor are starting to show itself. It doesn't mean that Nvidia is dead, okay? But this is the first time in over 2 years of coverage. Probably it's been 2.5 years of coverage of Nvidia where I'm saying, whoa, that dominance There's a little bit of risk right now, okay? Micron, real quick, in my notes, there's your risk reward. Those who have been watching for a long time, remember back around here, right, where I said I thought Micron was a good buy. It gave us some turbulence. I chickened out. I shouldn't have. All right, it took off. Boom. Goes to show you that when you have the colored lines, once again, notebook and pen are the most powerful things you have at your disposal because the rules are in the notebook and in the pen. Money mark? I break the rules sometimes. I look at the rules, I see the rules in my notebook, and I say, nah, I'm going to do this anyways. You know why? Because I'm a dumb human. If I wasn't a dumb human, I wouldn't have been a loser back in the day. Okay? I'm still trying to perfect my discipline at following the rules. That's all you got to do. You can be way better than me. You can have way better performance than me. All you have to do is follow the rules better than I do. Okay? And it's very doable. Because I give you all my picks. You're armed with the same information I am. You just have to execute it. Keep an eye on this one, right? The pricing on DRAM is going through the roof. If you are thinking about buying a laptop, buy it. Because the price is going to go up because the DRAM that goes into these laptops is going to become increasingly expensive. I've already seen the charts of the current pricing and it's gone up a lot in recent months. Not only that, but I know that that chart is going to keep going up because my contacts in the industry, again, salute to you, my boy, have told me that Micron has already told its supply chain, hey, when you're done selling this DRAM and you come back to us for more DRAM, we're going to increase the price 80%. Why? Because all the DRAM is being stacked and sent off to AI purposes. It's more profitable for Micron to sell their product as stacked modules into the AI ecosystem, and therefore, in order for them to justify making it to go into a laptop, for example, they're going to charge more. So watch out for the phones, the laptops, everything else. The DRAM content is going to become more expensive there. That's bullish for Micron, all else being equal, but you see the risk-reward chart. Micron already at the top. If you bought Micron on my word back when it was 100, it's now 240, boys and girls. Take some profits, or take all of your profits, take most of your profits, take some profits. All right. And by the way, the contacts are telling me this is going to be a mess until 2027. There is so much demand. Those giants that are competing to be the winners are spending so much money. You already know. We all know they're spending tons of money, but they're spending so much that it looks like it's going to be until 2027 before we see any breakdown in demand. AI is not a bubble. A bubble might be forming, but it's not a bubble yet. Okay? And I will keep saying that until I think it is a bubble. I've nailed the bubbles. I told you Oracle was a bubble. See that big spike above the red line? Boom. Since then, down 43%. I told you about that as it was happening. I will continue to tell you the truth about these things thanks to the experts that feed me this information. All right, anything else? Quick mention, VoxR if you like gold. I gave you, look at this. I gave you all VoxR way back here. And look where we are now. Oh, how the mighty have risen. Stock's about a triple off the lows. As a company that generates, and this is for your crypto guys out there, this is a company that generates royalties on every bit of gold that comes out of the ground from the companies that they have helped to finance. Okay, and now, of course, with gold through the roof, right, challenging a new high, even as Bitcoin, challenging a year low. We'll talk about why in a second. So this is bullish for VoxR, which is, all right, a little overbought here. GDXJ, which I gave you way back here. Look at it. Remember this chart, y'all? Remember I told you why this happened? Because gold was up and oil was down. Why this happened? Because gold was up and oil was down. Why this happened? Because gold was up and oil was down. And right back here, I told you, I made a big oval and I said, hey guys, for the fourth time, only the fourth time in 15 years, gold is up and oil is down. You got to buy GDXJ. GDXJ nearly tripled. All right, money in the pocket. Let's move on. Voxar, let's move on. But let's talk about Bitcoin and why. Why, oh why, folks, is Bitcoin down like that while gold is holding up like this? It's very simple, all right? It's called the Genius Act. I've been saying for a long time, Jamie Dimon has warned of it, okay? Currency is a strategic, it's as important. It's becoming as important as a military, right? When you form a country, your ability to defend your country against marauders is job one. So you need a military. Having your own currency is job number two. Having your own money is critical. You don't need any proof. Look at the US dollar. If not for the US ability to have its own dollar, to print at will, where would we be? In deep debt, in a much worse situation. But because we have a currency that is globally recognized and utilized by everybody and revered by everybody, it gives us the license to do crazy things that we probably shouldn't do. It just is what it is. So when you have something so important and valuable that allows you to do crazy things, why would you allow something else to come in and compete against that? You wouldn't. And that's what Bitcoin has started to threaten to do, right? And what did the Genius Act do? It enabled stable coins to be okay, right? By the US government. The government said, you know what? We want stable coins to be okay. But here's the thing, y'all. If we make stable coins okay, you have to make them backed by US treasuries, for example. Well, now guess what happens? Somebody overseas, right, has a weak currency, a currency that drops. The Argentine peso, for example, the yen over time. Those currencies weaken over time. And if you're a millionaire in Argentina, you're afraid that your currency is going to collapse. I remember back in the day when I was just getting started out of college, in one day, the Mexican peso dropped 2/3. It went from 3 to 9. For every dollar, you would get 3 pesos. The next day, they were giving you 9 pesos for every dollar. The old peso became worthless, etc., etc. Going to Mexico became cheap, all that stuff. And guess what? Somebody in Mexico, the reverse happened. Their ability to come to the United States on a vacation got destroyed. Overnight, it tripled in price. And if somebody in Mexico could have put all their pesos into gold or something like Bitcoin, that wouldn't have happened. Because in Mexico pesos, gold tripled in value that day. If Bitcoin existed back then, Bitcoin would have tripled that day, and the Mexican millionaire would still be a millionaire in terms of US dollars because their currency would have been preserved by gold or Bitcoin, right? So that's why you have gold. That's why you have digital gold, Bitcoin. Until now, it looks like Tether and other stable coins, the US government is backing them to be the digital gold. Why? Because now when somebody in Mexico, a Mexican millionaire, decides, well, what should I buy to protect my currency? Gold, Bitcoin, or Tether? Gold is heavy, okay? It's not like you can buy GLD, but that's not really physical gold, and physical gold is heavy. Bitcoin, great, that's digital gold, but it's very volatile. I can still lose, I could lose 33% of my wealth in a few weeks, right? Just like Bitcoin just did. But if I put it in Tether, it moves with the dollar. And that's what I want to do. I want to protect my peso versus the dollar. So I buy Tether. Great. Okay, so $1 million worth of pesos goes into the US dollar. Well, goes into Tether. First of all, those pesos get converted into dollars. Why? Because the Tether has to back the Tether with US Treasuries. And when you buy US Treasuries, you have to buy it in US dollars. So what did the Genius Act do? It did something genius. It created something that is more attractive to people around the world, a real stable coin, not Bitcoin, which is unstable, and backed it with US Treasuries that have to get bought with US dollars, which means now we have billions, tens of billions, in fact, of dollars worth of US Treasuries and US dollars being purchased, helping to prop up the US dollar. Oh, look, the US dollar has been going up recently. What a big surprise. Oh, wow, US Treasury yields, that boring 2-year yield I showed you, has been going down recently since the Genius Act. What a big surprise. And that's all to the benefit of the United States. So now instead of having competition for the dollar, you have something that actually helps the dollar. Ooh. So, to me, the Genius Act was a low-key way of the United States saying, sorry, Bitcoin, you're getting too big for your britches. I'm concerned about this, and so should you. At the end of the day, Warren Buffett has said it, Stan Druckenmiller has said it, Jamie Dimon has said it. So many people have told you we cannot put a value on Bitcoin. Because what is a Bitcoin? If the world blows up, you know what your house is worth. A car has value. A house has value. Food has value. A company that produces food has value. So their stock has value. Stocks have value. Real estate has value. Assets have value. Bitcoin in an environment like that could have no value. You could say it's currency, but how much stuff are we actually buying with Bitcoin these days? And I'm sorry for you people who love Bitcoin. I'm just here to tell you the truth because I've been telling it to you for a while, and Bitcoin has gone nowhere for the last year that I've been telling you this, to be careful, because if Bitcoin becomes too big, it will become the enemy of countries who have started to ban it. And the United States has not banned it. I don't think they will ban it. In fact, they've produced regulations in favor of it. That's great. Bitcoin, I won't be a bit surprised if Bitcoin bounces off these levels and moves higher, but it will remain a volatile asset. And Tether, stable coins in general, are giving the world a better option. And not for nothing, look it up. In Q3, there were record tens and tens of billions of dollars that flowed into stable coins that took the bite away from Bitcoin. Okay? It's all about supply and demand. And if there's less demand and more supply, there's more supply of Bitcoin every day. But if the demand drops, then so does the price. All right. So that's that. Sorry to break that news. I'm not telling you that I'm bearish on Bitcoin at these levels, but I was at those higher levels. And if you listened and sold your Bitcoin at those levels, congratulations. Now you have an opportunity to buy it back again if you'd like. Are we good? We're good. Let's go to Q&A. We got 40 minutes of Q&A. Hope you've enjoyed this, by the way, so far. Give me a thumbs up. I know some of you Bitcoin people are probably thumbs upping me, unfollowing me. I'm just here to tell you the truth. All right? I'm not a Bitcoin bear. I'm not a Bitcoin bull. I'm a truth teller. That's all I do. I'm not a bull or a bear on any stock or asset. I'm just here to decide what is the risk reward. I am agnostic. I am a money bull. I am bullish on getting more rich, whatever it takes to get more rich. That's what I'm going to do, and that's what I'm going to help you do. All right, let's go to the Q&A. What do we got? Hello to all y'all. We got the thumbs ups coming in. Thank you. We have the hearts being given me here. I appreciate that. Oops, made a mistake there. My bad, but whatever. No big deal. Let's see. Oh, by the way, so sorry. I forgot to say, if you have a question, put a question mark at the beginning of your question, because it's much easier for me to see it. If I skip your question, it is by accident this week. Usually it'll be on purpose, because I tell you to put the question mark at the beginning, you follow the instructions, and I answer your question. This week I didn't give the instructions, so that's on me. I'm going to try to answer every question. If I miss it though, put it back in the queue with the question mark at the beginning, and I will answer. Are there any beginner or intermediate books? I get asked this question every week, Bear. There are a million books out there on how to value companies. I would look at like Warren Buffett. Stan Druckenmiller, those are the two GOATs as far as I'm concerned. Peter Lynch actually taught me a lot of stuff through his books. But bro, I had a mentor, full-time work for 10 years. I would go to work for 8 hours, and then I would go home and work 8 hours on what I needed to research to become what I am today, right? So it's 10 years of having basically 2 jobs. It's that hard, all right? That's what I'm going to tell you. Before you go down the path of buying a book, ask yourself, am I willing to spend 10 years of full-time work to try to do what Mark does, or do I want to do the easy thing, which is to follow Mark's picks using his rules, which I can learn in a few hours, right? I get asked that question a lot. It's a great question. It's just I don't know the answer because it's been so long since I needed a book. And a lot of the stuff was taught to me by my mentors. Let's see. Let's see, Mr. Mark, I am currently a girl in investment banking. Hey, salute to my ladies out there. Salute to I see more and more ladies popping out into this community. It's a male-dominated show, and it's great that you guys, support this show. Not only that, but because it's a male-dominated show, I do a lot of male-oriented things, and you guys are okay with that, knowing that 99% of us are guys. Salute to you ladies out there. I'm currently a girl in investment banking. I want to get out of this job because I'm just a dog to my boss. Facts. What career do you suggest pursuing to be a good investor in research like you? Well, you've already gone down the path. I mean, if you're investment banking, you're learning a lot of what you need to know. Okay, the missing piece to me between investment bankers and what I do, because you do valuation all day long, so you understand valuation. You got to learn about industry research. So look up Gartner Group, Forrester Research, right? Those are companies that are independent, third-party industry experts. You need experts on semiconductors, experts on software, experts on AI to feed you information. All right, and I got my start at IDC, a competitor to Gartner Group. And then I was recruited by AMR Research, which eventually got acquired by Gartner Group. And each of those companies were independent third-party experts on technology. And in those companies, I learned the importance of having experts on your side, and I made friends with those experts, and those experts are my friends to this day, and I make millions thanks to those relationships. Check it out. You might want to join a Gartner Group or a Forrester or an IDC for a little while to get that industry expertise. And salute again to my ladies out there. All right, let's keep going with the questions. Usually I don't answer questions like that, but the ladies get special treatment. I'm sorry. Let's see what we got next. Next question. With so many stocks to choose, what are the filters you use? See, I don't use filters, my friend. I talk to experts in the industry. I look at the trends of what's going on. I look, Nvidia's telling you, Rubin is coming. Here's what Rubin's going to look like. You've got podcasts out there of experts talking about the future of AI. And I will absorb all that information and I say, who are the companies that are going to benefit from these trends? Stock screeners are BS. I'm going to screen for companies growing at 30% with a PE of 15. That doesn't tell you anything because that company growing at 30% might grow at negative 10 next year. And you won't see it coming because you don't have a third-party industry expert telling you that the trends of the industry are about to turn horribly against them and they're going to go from a 30% grower to a 10% shrinker, and that 15 PE is not going to matter anymore because they're going to have negative earnings. See? Screeners don't work. You have to look at the trends going into the future from the independent third-party experts, not the 10,000 clowns out there. Here's what the future is. Shut up. You don't know unless you've talked to a third-party independent expert because even they don't know for sure, but at least they give you the best fighting chance. Gartner told me about GPUs in 2002. Do you know what Nvidia stock was in 2002? Here you go, Jack. 7 cents. They told me in 2002 that GPUs were going to take over for CPUs in the future of computing. And that didn't really come into the light until ChatGPT 3, back right around here. Okay? And yeah, the stock did well in the meantime, but this was the biggest run right here. This was the 10-bagger in 2-year run. You didn't get a 10-bagger in 2 years from way back here, but they were there. They told me that this was coming 20 years before it happened. This is what you need. All right? Let's keep going because I know there's some stock questions here. I don't want to educate you guys too much. I want to inform you. All right? Education takes too long. Yes, I understand. Some of you understand inference better. Some of you understand training better. That's what I have independent third-party experts for. I get to understand it just enough to give you the bottom line. All right? But yeah, thinking about it, you're right. Risk-reward chart on Oracle. There it is. Given how thinly traded some of your picks are and the size of your positions, how do you stage your exits if the story changes without crushing the stock price? Yeah, that's a great question. Ron, when I get into a thinly traded stock, it takes me months sometimes to buy the amount of shares that I want. Some of the stocks that I've given you and announced, I could end up still buying the stock for a long time after that. Right, I want to provide performance, right? So I can't just buy the stock until it's at its peak and then, oops, sorry guys, couldn't give you a pick. But here's the thing. If I buy a stock at $1 and it takes me weeks to buy it and it goes to 10, I made 10 times my money. And when it gets to 10, the volume is tremendous. Let's look at TSSI as a perfect example. Here's the daily chart, all right? And when I said to buy TSSI, back here, the daily volume was, let's see, where is it? Oh yeah, $4 million. $4 million a day. 4 million. Okay? This move right here, that dollar volume was, where is it? 400 million. 100x. And to this day, we are getting much greater daily volume. Tens of millions of dollars of TSSI being transacted every day. That gives me easy liquidity to get out, much easier than it took me to get in. The problem comes if I'm wrong. Ron, if I'm wrong, I eat it. Big deal. If I pick a winner and I pick a loser, right? It takes me months to buy each one. But then when the big winner comes and I make 10 times my money and I get out easy, boom, that's great. And if this one doesn't work out and it crashes and I don't have the liquidity to get out, I'm just going to assume I'm going to lose all my money on this one. But so what? I put in $2 to make 10. The one that became a 10-bagger more than made up for the one that went to 0. And that's the way I look at it. Come on, we got to get some, like, we got so many educational questions here. You're going to bore people right off the channel. Let's go. But you guys are still here. We still got over 300, so it's cool. Let's see. Many drop at the red line. So you lose your 20% plus. How can you time the eventual top if it keeps running? No, David, you can't time these things, right? And that's the whole thing. Right? You see, with TSSI, it went above the red line. It didn't quite get down to the green line. You have to own some as it approaches the green. You have to sell some as it gets to the red. Some people kept a little bit of the stock as it went higher. No problem with that. I already said, this is 1 and this is 10. This is where you own 1%. This is where you own 10%. Right? 1 can be 0, by the way. I own 0 here. Right? But 1% is cool. I'm not going to be upset at anybody that keeps 1%. If you bought here, made 10 times your money, and sell 9 and keep 1, you can't lose. Right? That 1 can go to 0. You still got 9 in your pocket. It's all good. And yes, there are times when a stock goes below the green line. But this is why the research is so important, because when it does that, it just means the stock has become cheaper. And when it gets above the red line, it just means it's become more expensive. You guys have been taught with technical analysis that it's broken the bottom line. That's bad. No. In technical analysis, that's true, but in fundamental analysis, it's the opposite. As long as the research holds up, as long as the company is what I think it is, based on the research, based on the experts, the lower the price goes, the better. That's why Warren Buffett says that. Because Warren Buffett is not a technical analyst. He doesn't base it off the charts. He bases it on the value of the company versus the price. Money Mark, you said you sold puts on TSSI. Do you sell put spreads? No, I'm not going to answer that question. You learn about options and do your own thing. You probably can do it better than me. At UBS 2025 Global Technology AI Conference, Amplitude, a former pick, highlighted that its growth is accelerating from platform expansion and new AI products. Do you see the company performing in the near future? Listen, I am impressed with their products. I have no change in that aspect of my view of Amplitude, okay? The reason that I got out of Amplitude and told you to get out of Amplitude back here before it dropped to here, right, was because there is confusion in their customer base around how they fit in with AI and what they might do, because Amplitude's getting to the point now where they might replace the very people that they are selling to. I don't know about you, but would you want to buy something at your company that would replace you? That would make you expendable? And that's caused problems. Okay, and as a result, there are a lot of people at Amplitude who have actually left the company. There are people who have been forced out. There are people that have quit because there's this turbulence there that they're trying to get through. Now, as far as them saying that growth is accelerating from platforms, yes, it's the company's job to tell you these things, and it might be true, but it might not. The biggest mistake that investors make is listening to management without verifying and confirming that what they're saying is 100% true and accurate. And it's not to say that management lies, but it's management's job to be bullish and champion their company, to believe in their company. What CEO would you ever want a CEO that is bearish and doesn't believe in his company? No. And that's why you have to understand the difference between what the company is saying and what the 100% accurate truth is, the whole truth and nothing but the truth. These guys are going to tell you the best story they can, hopefully without lying. And on this side of the fence, you're getting the whole story with definitively no lying. You see the difference? And that's the difference between listening to management and verifying what management says through third-party independent experts. That's why I keep hammering that, because people lose money every day by just listening to management. It's the best way to lose money, especially in microcaps. I go to a microcap conference, 80% of the CEOs that I meet are telling me a BS story. Okay? They might not be lying to me. In fact, I would assume that most of them are not lying to me, but they are telling me a BS story. There's a difference. All right? So guess what? If I bought into all those stories, and there was a time when I was younger that I would talk to a CEO and be so enamored with what he said, I bought the stock and lose money, and bought the stock and lose money, and bought the stock and lose money, and bought the stock and made money. 4 out of 5 are losers. Why? Because 80% of these companies are losers in the microcap realm. But when you find that one winner, you're going to make 3, 5, 10 times your money. So if you become good at telling the difference between the good 1 out of 5 companies and the bad 4 out of 5 companies, you can get rich. And that's what I'm here to do for y'all. Is that Gatekeeper deal the previously mentioned $100 million? No, it's not. This is a whole new different thing. Listen to what I said. Go back and listen to what I said. It's a proof of concept. They're proving themselves. Trust me, if and when they win that $100 million deal, I'm going to tell you. And look, I give that educational content. We lost a bunch of viewers. All right, we're going to skip the educational content. It's going to be all stocks for the rest of the show because we don't want to lose audience over this. I told you, you guys got to learn some of this stuff for yourselves. ITM, SF. We got some AI questions in the queue. TSSI questions. There's your intermap chart. Be very careful with this one right now because they are highly dependent on two binary events. One, whether or not a bunch of money flows in between now and year end, and two, whether or not they win the phase 2 deal of Indonesia. Okay, I would rather, look, it's better to show up in the second inning than to get rained out. So just be careful, but the stock's already come down quite a bit. You notice that I haven't been big up in that stock of late. There's a reason, because there's some turbulence, and you see what's going on here. We're waiting to see. They win those deals, the stock goes ham. They lose those deals, and the stock probably goes down. So they're in the best position to win. So the probabilities are on our side. You see the risk reward here. Well, pay attention to where those risk reward lines are and size your position accordingly. Right? I watched the Palmer Luckey video that you recommended. My mind was blown. Any information on their public offering? Stay tuned. You'll hear it in the news before you hear it from me. Mark, how many branch experts do you follow? Can you provide the names of the best experts you listen to? I can't do that right now. There's a lot. I'll try to tweet out stuff. Follow me on Twitter. You'll see the things that I tweet out. When I retweet something, it's usually by somebody I respect. And if it's not, I might say, I don't respect this guy, but he's got this one right, or something like that. Can you show me the chart on Hydrite? No, because I don't cover them. We're now in the lightning round, ladies and gentlemen. We got 20 minutes left in the show. Do you put IT in the group of we'll figure it out? I think so, yeah. I own stock in Gartner Group. They are getting crushed because of AI. People think that AI is going to overtake them. Nobody's going to need Gartner Group's experts anymore because of AI. Are you crazy? Are you crazy? What did I just do? Hopefully I didn't do anything bad there. Let's see. I think we're fine. You cannot replace human intelligence in many cases with AI, because there's going to be new technologies, new use cases. It's all like snowflakes, right? And AI's knowledge is based on things that have happened before it. And it doesn't quite do reasoning as of yet, right? I believe Gartner Group is going to figure it out. By the way, they have their own AI. They have their own LLM. There's going to be thousands of LLMs of proprietary content, right? Gartner has tons of super valuable proprietary content that I used to pay. I forget what I used to pay, right? 5 figures. Definitely, it was in the 5 figures. I don't know if it was, $20, $40, $60,000 a year, whatever, just to access their research, okay? And they've taken all that decades and decades of knowledge and put it into a proprietary LLM. They are not letting anybody else have that knowledge. Okay? They will let people access that knowledge if you pay them for it. And that makes their job easier. Now, instead of back in the day, they hired somebody like me out of college. I had, a full college degree, right? I'm going to be a big man on campus, and I got hired by IDC, and I'm like, what do you want me to do for you? I'm ready to do some really smart stuff. Like, yeah, operate the fax machine, bro. What? Yeah, when somebody calls and asks a question, find the answer in a report, photocopy that page, and fax it to our customer. That was my job. Okay? Not anymore. Because now all that knowledge is in an AI, and instead of somebody calling me up, right, and saying, Mark, what was the third quarter market share numbers for PCs? Right? They go on their computer and say, what was the third quarter market share for PCs? And it pops up. Right? I think Gartner Group and maybe Forrester will figure it out. Forrester being completely crushed, but you want to bet on the best of breed player, right? CXDO being a best of breed player. IT is the best of breed player when it comes to knowledge on technology. I do think they will figure it out. Curie chart. I still don't know why people aren't figuring this one out yet. All right. I think the stock should be at a 52-week high, which is 7. The stock's at 450. I owned more Curiosity Stream than I owned 2 weeks ago. I owned more 2 weeks ago than I owned 2 weeks before that. I've been a buyer, a consistent buyer of Curiosity Stream. There's the chart. Thank you for all the happy birthday wishes. And look, our attendance is picking back up. We talk about stocks, it picks up. We talk about education, it goes down. That's why I put the education here for anybody who wants it, right? And on the show, we talk about stocks. The education's out there for y'all. I believe you've discussed Team long ago as something in your wheelhouse. Are they another large cap? Oh, Atlassian. Yeah, I talked about them briefly in the past. I didn't follow up because I did follow up, but I didn't get to the point where I felt like I could understand the company well enough. I couldn't find the third-party independent experts that could make me smart enough. Because let's face it, I'm a dummy too. Right? We got a guy here that just said, Mark, you didn't quite explain inference right. Well, yeah, because I'm a dummy. Right? I talk to experts, they fill me in, I ask them questions. Oh, does this mean good things for Nvidia? Does this mean good things for Curiosity Stream? Right? And they'll tell me yes or no, and then I make these picks, and then I run my numbers, I do my research, I talk to management, etc., etc. I don't have to understand every little bit technical thing. I need to understand that what they have is great technology that's needed, and they're the best at making it. I don't understand how Crescendo software works. I never will, and I don't need to. I never have. I've never needed to understand these things to make money. I just needed somebody who does. And Team, I couldn't get to that point. I couldn't find somebody that could get me to that point. Mark, you're a legend. Thank you. Whoever just said this stock is going up, don't do that on my show. I didn't warn y'all before this one. Do not pimp your stocks on my show. It's my show. I deleted your comment. Next time I delete you. Hasn't Micron announced they're going to stop doing crucial RAM? Look it up. Just look it up. You don't have to ask me. Hi, Mark. Do you think it's wise to wait to see what comes of the Fed meeting on December 10th before buying stocks? No, nay, never. No, 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 no. That's not how we do things. Did you not hear me? And you're new, so I won't call you stupid. I'll just think it. Okay? Did you not hear me? Did you not write down when I said that all you need, all, A-L-L, meaning everything that you need, is a risk-reward chart to tell you about what to do in the markets. Stop thinking so much. It's one of my hashtags. Stop thinking. You're thinking too much. Just follow the rules. You don't need to be a genius to become a millionaire. You just need to follow the rules. And one of the rules is don't think so much. CNBC is effing you up. It's filling your brain with a bunch of stuff that they pretend that you need to know. You don't. All you need to do is buy low, sell high. Go back and listen to what I said when I said what I said about the Russell chart and the yellow line and all that, and you'll know everything you need to know about when to buy stocks, and has nothing, never, ever, ever has anything to do with what's the Fed going to say next. Get out of here. But welcome to the show. All right. And no, if this is your first time watching, I'm not picking on, well, I am picking on you, but that's part of the show. It's part of the entertainment value. It's like, this is the first time I got to even imply somebody's a dummy, right? 250 people, most of them waiting for me to go off on somebody and call them the dummy of the week, tell them what a moron they are. Haven't found anybody yet. You're the closest thing to it. So salute to you for providing us with some entertainment value that we sorely needed on this week's boring show full of great information, but still kind of boring. It's not the same if I don't throw my hat, is it? Come on. We answered that question about IT already, Gartner Group. Do you have any concerns about Intermap with the delays in the contract? Yes, I do. We talked about that already. Would you please share with us the picks you are currently most heavily invested? No, I don't talk about my personal thing. Just follow the rules. And I think I've seen you here before. If I was sure that I've seen you ask questions before, Will Donger, you would be the dummy of the week so far. But I can't, so I'm just going to assume you're a newbie and give you grace. And thank you for the belated happy birthday, by the way. Salute. Let's see what we got here. You're trying to learn options. Ask AI, ask YouTube. You'll learn about options there. And that's not a question, by the way, so don't put question marks on a statement. You could have said, can you help me learn about options? And then I wouldn't call you stupid for putting question marks on a statement. I would say, that's a question that I can't help you with. Go ask YouTube, go ask AI. It's a good question, but you didn't ask a question. You put a statement with question marks around it. It's stupid. Did you go to school? Did you go to elementary school? Because they taught me, I don't know about you, they taught me about question marks in elementary school. And they didn't go on statements. Periods go on statements. You must be on your period. Could you please, because your brain does not have the blood. There's the Amazon chart. There's your crescendo chart. I know you love the educational stuff static. We just can't do it. People don't like that. Y'all got to educate yourselves. Translate upgraded Sky Trains cameras in 21, spending $25 million. The cameras seem far outdated. My view on whether they will revisit this soon. I don't know. 2021 wasn't too long ago. Usually trains get replaced on like a 10-year cycle. Hey, it's only been 4. So I think it would be more likely, I mean, yeah, maybe they could replace the cameras or add AI to the cameras or something, but I don't know the situation. Every situation is different. I don't know their specific situation. Do you have any expert contacts? We're not going to talk about that. I am downsizing my teams due to AI software. It's making us faster. The leaders don't get replaced and the leaders make the decision. I understand that, Joel. And Joel. Why did I call you Joel? My bad, bro. By the way, an industry expert on hand right here. Okay. Been very, Jonah, very helpful in the past. With his expertise. And yeah, I understand the leaders make the decisions, the leaders don't get replaced. But I mean, don't you have friends, bro? Like, do you have friends that you have to fire? Like, I don't think everybody like is like palatable on that, you know. And more importantly, that's the philosophical question, right? You're doing the right thing. Because this is what's going to end up happening anyways. And it's part of your job as the leader. It doesn't matter if they're friends or whatever. If you can make the company more efficient, that's your job. Sadly. Or not. But the fact of the matter is my contacts at Amplitude told me that their potential customers are concerned about that. That's just a fact. Whether or not they should is up for philosophical debate. And I won't hold it against you. I think you're right. But it doesn't change the fact that something wrong is happening out there, and it's not to Amplitude's benefit. Potentially, it puts a fly in the ointment, right? And I like to find 10. So maybe Amplitude is now an 8, not a 10. And an 8's cool. If you still own Amplitude, I'm not mad at it. And I hope you make money on it. I don't think Amplitude is going to go down. I don't think anything. I think Amplitude is no longer a 10, and I want a 10 in my official portfolio. So I said, you know what? It's not a 10. Let me get out. If it becomes a 10 again in the future, I'll put it back on. If I have to spend more, if I have to pay 14 knowing it's a 10, rather than selling at 12 thinking it's an 8, that's fine. That's fine. You pay up for the 10s. All right. My bad, bro, for the hiccup, by the way, on your name. It's Friday. Are you bullish on Path? I know about Path. I don't know enough yet to be bullish, and I don't take requests. I haven't talked about Path in the past. So, can I see the ATXRF chart? There it is. Copper miner in Chile, by the way, and customer of GeoDrill, one of my favorite stocks, one of my largest positions. So there's the chart on that, and there's the chart on GeoDrill, which I love, this company. I know moving up in the risk reward, but there's still plenty of room between here, and I believe they are operating on all 10 cylinders. So those of you who've learned, it's not just about where the stock is in the chart. You can say, that's high. It's on a scale of 1 to 10, that's probably a 7. That's high. Well, it's not high compared to how many cylinders they're operating on. I am happy to pay a 7 for a company operating on 10 cylinders, because a company operating on 10 cylinders should be at the 10 level, which is actually the 1 level, all the way up here. So I think Geodrill should be up here in the 5s, not down here in the 3s. That's a 40% gain from here. And as long as I think they're operating on all 10 cylinders, which as of right now is going to be at least until April. So we got December, January, February, March, April. We got about 4 or 5 months where I just sit back and relax. I'm not worried at all about how many cylinders you guys are operating on. To me, it's all 10 cylinders, and there's a very good chance I think the stock moves up towards this level between now and then, and between now and then we can continue to assess whether they're still on 10 cylinders. That's how we make money. Rewind and listen to this again, what I just said. That was some great education, and I might have been confusing to you. That's cool. That's 30 years of expertise all in 30 seconds. Listen to it like 6 times and it'll start to sink in. You'll understand what I'm saying there. All right? Or don't. I don't care. I just led you to water. You can drink or drown. Can I cover path? No, I don't take requests. Never ask me, can I cover a company? Never ask me about a stock I haven't talked about before, okay? Because I am looking out there at the very best opportunities, okay? I have plenty of experts helping me to figure out in what order I should look at the best opportunities. And it's not the company that can be the next 10-bagger. It's the company that can be the next 10-bagger where I have the resources at my disposal to ascertain, to have confidence. I want to have enough confidence, enough expertise, enough third-party expertise on my side to give me the confidence to put that stock in my portfolio so I don't have to feel bad if the stock goes wrong. Because if you lose money, I feel bad. I want this spreadsheet to continue looking like this. And I won't be able to do that if I pick the wrong stocks. And so if I don't have the contacts on a name, then I can't cover it. So don't ask me about a name. I already know about it. All right? It's almost sure that if it's a company in my wheelhouse, I already know about it and it's somewhere in my queue to research it. Yen carry trade shenanigans. Not in my wheelhouse. Ask somebody else. Good question, though. Can we see the risk-reward lines on IZEA? Of course. We got 5 more minutes. We got a few more questions in the queue, so we're on perfect timing right now. There's your risk-reward on IZEA. I don't know why the stock's down 4 or 5% after what I said about them earlier today. But so be it. By the way, this company, I think most, if not all, of the potential bad news is out of the way here. All right, so this is a nice accumulation level. I kept saying that this consolidation, and like I said, right, I give you my, by the way, shoot, I forgot this. So let's take care of it now, right? These disclosures, disclaimers, everything that you've heard on here is a complete clown show. If you are listening to this or anything that you've heard here, these are not recommendations or price targets or anything. And if you are listening to this show, then you acknowledge that you've read this and you're okay with this. And anything that I do, I can do anything I want with any pick, blah, 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 blah. We're going to leave that there for a second. As I talk about IZEA, I told y'all, do not chase my picks, because I'm not making picks, right? It's a CYA. I'm covering my ass here. We got to put these disclaimers in here. So you hear about me giving you stock picks. We make lots of money on those stock picks, but I'm not giving you stock picks. I'm just giving you information for entertainment purposes only. And if that entertainment content happens to make you money, great. That's on you. Nothing to do with me. And I've always said before, when I talk about a stock, I assume that you are not taking any action on that stock, because I'm telling you to not take any action on any stock I talk about. Therefore, we can eliminate the chance that anything I'm saying is influencing the stock, and therefore, if the stock moves, that I can take action and not be somebody that can be considered to have manipulated the stock. Blah, 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 blah. It's amazing how much you have to cover your ass in this world these days, folks, because it's a riot. What I've gone through and what I've experienced in life, especially in the Wall Street world, has taught me that the bad guys get away with it because they learn what the good guys, what the cops, SEC, etc., are looking for, and they just circumvent it. Okay? And the good guys end up getting nailed because they might slip up or break a little rule here, and not knowing, because they're not trying to trick people. And so you end up with these disclaimers that come up over here, right? And these are things that you learn in life. So, I got to do this every week. Sorry. Anyhow, Jonah. I'm really sorry, bro. That was a crazy hiccup on my part. I don't even remember what I called you. Now like Jonah is firmly in my head. I don't even remember what I called you the first time. It was so funny. Isaiah. Amplitude. OpenAI. I don't think OpenAI becomes a real true competitor to Amplitude. Although you've got a good point, and I'm not going to argue with it because you are a industry expert. TPCS chart. Are you still watching IDN, or have you dropped them? Now, there's a dummy of the week. Thank goodness. Second to last question of the day. 1 minute before the end of Q&A. And ladies and gentlemen, we have a dummy of the week. I don't care if you're new or not. Because, no, you can't be new, because you know that IDN is a stock that I've watched in the back. No, I didn't watch IDN, stupid dummy. This is a stock that was in my portfolio right here. There's IDN, right? Closed. So where's your question coming from, stupid? Huh? Are you still watching IDN, or did you just drop them? I said it a million times. Why would I stop watching a company that I've looked at before? Why? I say it all the time. I don't dump a stock and stop look. When I dumped IDN, I told you why. And I told you that I would end up buying this stock again sometime in the future. What is it in your ears that needs to be surgically removed besides that shriveled up thing you call a brain? You need to open your ears and take notes and understand when somebody says something, so I don't have to waste the time of 350 people to explain to your dumbass that when I spend 100 hours, bro, if I spent 100 hours to learn a song, and I stopped singing the song for a few weeks, we say, did you forget the song? Will you never sing the song again? That's dumb, isn't it? Doesn't that sound dumb? Wouldn't it sound dumb to just take 100 hours of research and just throw it away? Just because a stock did what you thought it would do. And then you come here, right? I come here every week, and when I continue to say great things about IDN. You obviously didn't listen. So, congratulations, you get to be the dummy of the week. Swarles Barkley, stupid. And thank you for being the dummy of the week. Thank you for providing us with that entertainment, by the way. The rest of you, I'm not really mad. But you deserve that. You deserve that. It is past 3:55, so we're done. And chlamydia, that's what I'm going to call you. You asked me a dumb question early on, so I'm not going to answer anymore. I make an exception once in a while, but the questions have all been asked, answered. 3:55 as promised. So, if you haven't given me your thumbs up, I know you dummies of the week. Maybe you won't. Maybe you will. If you're a real man, you will, by the way, because you understand that it's part of the entertainment of this show, part of what we do. It's part of the hard love that I give, that tough love that Coach A-Hole is here to give you to help you. Because guess what? Coach A-Hole needed a Coach A-Hole to become Coach A-Hole. I needed my mentor to be hard on me because I was dumb. I was stupid. I said dumb, stupid things, and I did moronic stuff for at least, it was 3 years plus before he finally got through to me and I even started to be smart. So I really can't be mad at y'all for not getting it right the first time. It took me years. It's going to take you years, perhaps. You're probably smarter than me, so it'll take you less, hopefully, right? But we're here every week to be that Coach A-Hole for you, to provide you with that information, to provide you with that entertainment. Anything else? Anything else? No, there's nothing else. Same time, same day, next week, Friday at 2, Stock Talk Live. It's Money Mark. Have a great weekend. Blah. Wish I could have put a better bow on that, but hey, what can you do? You know? It's been a long week. We got some stuff to do. I took care of that. We didn't have time to talk about that, but we will in the future. That still got a lot to talk about. That's good. So we'll throw that away. Okay.